Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with an income pick. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. No matter how safe an investment sounds, there are risks involved. To read more about it, please see the description below. And if you want to read more about what John writes on a regular basis, you could head directly to www.incomeinvestors.com. While you're there, you could also sign up for some free reports that we offer that get delivered to your inbox. Small cap, high yield dividend paying companies that are growing their revenues, delivering high profits, and churning out free cash flow aren't that common these days, but they're ideal for income investors who seek higher yield and are willing to take a little bit of risk. And that's where today's income pick comes in. Delek Logistics Partners, traded on New York Stock Exchange under symbol DKL. John?
Yeah, thanks, Mo. Tennessee-based Delek Logistics is a midstream energy company that owns and operates logistics and marketing assets for crude oil and intermediate and refined products here in the U.S. Its assets are company-owned and via joint ventures. Its key geographic areas of interest include Permian Basin, Delaware Basin, and other regions in the Gulf Coast area. This includes Texas, Tennessee, Arkansas, and Oklahoma. Now, Delek Logistics is a master limited partnership, or MLP. Now, to qualify as an MLP, a company must generate a minimum 90% of its earnings from mineral and natural resources. Delek Logistics operates through four major business segments: gathering and processing, wholesale marketing and terminaling, storage and transportation, and investment in pipeline joint ventures. Now, the pipeline and transportation segment includes pipelines, as you would expect, trucks and ancillary assets that provide crude oil gathering, crude oil intermediate, and finished product transportation and storage services. Now, the company is always looking for ways to increase its long-term value. Back in June of 2022, Delek Logistics acquired Three Bear Delaware Holding for around $625 million. Three Bear Delaware has crude oil, natural gas, and water gathering, processing, and disposal operations in the northern Delaware Basin.
John, with oil over 90 as we record this video, how is Delek Logistics doing financially?
Delek Logistics revenues have risen by double-digit percentages in the last 2 years to a record $1.04 billion in 2022. Its revenue increase in 2022 was driven mostly or in part by the acquisition of Three Bear Delaware Holdings. The company's revenue compound annual growth rate for the last 5 years is a pretty solid 12%. Now, analysts predict that Delek Logistics will report an actual 2.1% drop in its revenues to $1.01 billion this year, but come back with 6.4% growth to $1.08 billion in 2024. On the bottom line, Delek Logistics has consistently delivered strong, solid earnings per share. There have been inconsistencies, but the results have been good. And this means the company should have no problem continuing to pay dividends. Going forward, analysts expect that Delek Logistics will report a slight earnings decline to $3.58 per share in 2023. And that's prior to staging a strong increase to $4.07 per share, diluted share in 2024. This translates into a forward price to earnings multiple of about 10.2 times the company's consensus of 2024 EPS estimate. And that should provide some cushioning.
John, you touched a little bit on dividends. If you don't mind, tell us a little bit more about how are dividends looking at Delek Logistics?
Thanks to the company's reliable distributable cash flow, which increased roughly 9% in the second quarter to $60.5 million, Delek has a pretty strong history of raising its dividend, actually every quarter since 2013. Most recently, in July, it reported a quarterly dividend of $1.03.5 per share, or $4.14 per share on an annual basis, for a yield of 9.63%. Now, that's almost triple the current inflation rate. That ultra-high dividend yield is not a fluke tied to falling share price. In fact, the yield is in keeping with Delek stock's 5-year average, which currently stands at 10.12%. The company's payout ratio of 111.67% may appear to be high, but MLPs tend to have much higher payout ratios than other type of companies. And given Delek Logistics' expected earnings, its dividend will likely continue to rise.
John, thank you so much for your analysis. Delek Logistics Partners, traded on New York Stock Exchange under symbol DKL, is a financially robust company with long history of returning cash to shareholders, having increased its payout for the last 42 consecutive quarters. The company actually targets a 5% increase in annual distribution, and judging by its strong year-to-date results, it looks like 2023 will be another year of inflation-busting growth. This makes it ideal for aggressive income investors looking for a high dividend and potential for high capital gains. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.